Investments in securities are subject to market risks. Read all related documents carefully before investing.
Hello and welcome to the Weekend Investing Daily Bytes. We are shooting this episode on 16th of May, and the market coming off a bit from the day's highs, sort of, just getting tired of going up every day, so, kind of taking a break. Nothing suggests that the rally is petering out or anything like that, but just that after this initial leg, if you see here, beginning of April, we had some down and rest days. I think similar sort of moves may happen here for some few days before we get the momentum back again. It just my uh, gut feel, could be totally wrong, but overall we are still in this upward moving channel. We are still above this IEHNS breakout. We are still above many other breakouts, pivotal breakouts, and we are still just a few percent from the all-time highs. So, from all other perspectives, I mean, nothing has changed, but a bit of lethargic move today. You can say maybe just getting tired of going up, and you can see the heat map for the Nifty. Difficult to find any green here, although ONGC, Coal India, BPCL, they all moved slightly in the green. Bajaj Finance, State Bank also in the green. Titan, Wipro, Infosys, Asian Paints, Levers, slight gains on these, but largely you can see big losses on HDFC and HDFC Bank. This was ex-dividend uh, uh, move also within this, and beyond that they fell further also. Reliance surprisingly was also down at 1.42%. I was expecting Reliance to go up after the windfall tax avoidance news now. There was some major selling in autos also, so 1.5% off on all Maruti, Tata Motors, and Mahindra. Kotak Bank also lost nearly 1.3%. Um, you had some losses in the cement space, although there was some expectation that GST may get reduced on cement. I thought cement stocks should do well, but they did not. So, news and uh, actual movement of stock prices on ground can always be very, very different, and that's what we're going to discuss in the latter part of today's episode. What comes to us as news already is sometimes discounted. Most of the time, it is already discounted, and we get a rude shock at that point of time. Sectoral overview: all sectors in the red, barring IT, public sector enterprises, and public sector banks. Marginally in the red were energy, real estate, FMCG, pharma, and metals. But as you go down, private banks and autos were the major, along with consumption stocks, major losers, more than 0.5%. Nifty also losing 0.6%. For the week and for the month, still things are looking still pretty green, with real estate doing the best so far in the last 1 month at plus 11%. Even over last 3 months, real estate has done the best at plus 14.9%. And for the financial year so far, 21.9% on real estate, 13.3% on autos, and rest is distributed. So no sector except IT is down for 23-24 right now. Nifty Next 50, we don't discuss this index, but this index has been performing quite well in the last month or so. Even after this breakout, we're expecting this to move to 4,800. So that target has also been met. And today there was a sort of a spinning top kind of formation here, but uh, very, very strong in terms of a pullback from where it reached, but still far off from its all-time high versus other indices. Mid-cap index was the major surprise. You can say it went to a new high, a 52-week high, crossing this previous high at around nearly 33,000, but then it gave back all the gains in the latter half of the day, again making a very iffy kind of candle to to move forward from here. Let's see how this plays out. We may have made a intermediate or a short-term top here. Small caps continue to go up. Pretty much remained in the green for large part of the day. Also closed very near previous day's close, so no give up here. But as we have been seeing, one day up and one day down has been the sort of sequence for the last 7 8 days. Bank Nifty, the strongest of index amongst all these that we track, also opened near the previous day's high, but remained, weighed down by the HDFC Bank and Kotak Bank coming off and remained in the red for the day. So discussion for the day, and I'll also take any queries if you have. Please type in the comment section. Last few minutes of this episode, I'll definitely take up some comments. News follows price, so we'll just go through some examples. The idea that I have been propagating for long is that a lot of times the market moves ahead of the news, or any results, or any corporate announcement, or any corporate restructuring, some special dividend, some bonus shares, some mergers story, some outstanding results, or even on the other side. I mean, not just on the positive side, even on the negative side, some bad news, some bad results, some crashing of margins, some crashing of market share, whatever may be that event which has a significant move from the current narrative, that usually gets discount ahead of its release. So a lot of times you will see that the market, the prices are moving in one direction, and most people, including media, including most market participants, are perplexed as to why the stock is moving, why the price is moving, because there has been no announcement, there has been no results, there has been no reason for uh, the stock to move. So this there is one this concept of the reasoning of move, uh, for momentum investing and people who believe in the momentum investing concepts. They don't wait for a reason to buy a stock. So while the traditional investing regime is based on, you bought the stock and there needs to be a reason for it. So that reason could be a, you know, some valuation that you may have done. That reason could be some event that may have happened, or maybe you are expecting. So a lot of times people, I what I find in my own personal experience also is that people are trying to find a reason. Why is this thing going up? Why is this good thing going down? And they will find it eventually, but by that time that move is done. So what is the point of knowing the reason if that move based on that reason is already over? So for instance, this Rail Vikas Nigam Limited has been running for a while, and it has perplexed a lot of people, why it is running. uh, at least I did not come across any credible explanation why it went up so many folds. But then very recently, it was announced that government is approving it as a Navratna status, and it had been running since October last year, and no particular reason as such. 229% ahead of this, and only once it had run up was this news announced that so many orders are coming to this, and it has been given this special status, which will help in its growth going forward. Oil India, for instance, greatest results, highest ever profit after tax. I think it came today itself, 1746 crores versus 1244 crores. So, it's running up 41% in the last many months, ahead of the results. So again, stocks are running up. You don't know why they are running up, but the outcome is there. Hindustan Aeronautics, another one. Margins are very good. Um, just see the stock how it is going, and also in the last few months, 30, 35, 40% in just 3 months here. So nobody was willing to believe this stock could go up 2 3x a public sector enterprise stock over the next couple of years. But that's what the BBC principle is all about, the Bhao Bhagwan Che, where the price is leading the narrative. Bank of Baroda results, volumes 168%, dividend declared high, up 30%, leading to results, and also has been running up for the last year and a half. So as results have started to improve in the last 3 months, stock has already moved up, and the news is catching up with the price and not the other way around. So what we have seen in the last couple of years, public sector enterprises up 70%, public sector banks up 121%, whereas Nifty up only 40%. So strong focus now government to revive the profitability and the health of these sectors, and the market is running ahead of those results and those news about that focus. So again, I mean, if you keep waiting for the reason, maybe it'll get too late. But in terms of momentum investing, I mean, you would have been riding many of these stories well ahead of before the fundamentals became clear. So Bhao Bhagwan Che always uh, acting post an announcement, once everybody, the whole world knows about it, is always fraught with risk, because it is usually over discounted by that time. And the beauty of momentum investing is that once the price movement is there, those sectors are automatically represented in the momentum portfolios, even before the results or anything else triggers them into other portfolios. So momentum investing, which is based on price and volume action, will make sure that the right sectors are there in your portfolio, and the weak sectors of the market are definitely removed from your portfolio. So this is all I had for today's session. Let me quickly go and see if I have any questions. Uh, I only have some thank yous. Thank you, Rihanna. Thank you, Samir. Uh, I don't have any specific questions, so I'll end here. Thank you for watching this, and I'll see you in the next episode. Thanks. Bye.